What I really loved that I think prepared me the most for being a CFO was really getting to sit in and listen to conversations that other CFOs were having. I really just took that and was a sponge and would come back and ask questions and just hear how someone else talked about something to a client, how they received it, what types of questions they were asking. It was really that frame of mind that I took into those conversations of knowing what I wanted my next step to be and really just trying to absorb and look at the work a bit different from that.
Episode of the Modern CPA Success Show. We're excited to have someone internal that we're going to be working with. And so Hannah and I are going to be talking through this. I'll introduce her in just a minute. I'm Tom Wadelton. I'm a virtual CFO with Anders. Hannah Hood's a principal with our VCFO practice. Hannah, welcome to our show today.
Thanks so much for having me, Tom. I'm excited to be here.
Yeah, I've worked with you for so long. I'm excited about this conversation, but give us a little bit of your career background and what's brought you into the role you are today so people kind of know who they're listening to.
Yeah, so it's been quite the journey. So I've been in accounting for about 20 years. Prior to this, had really only ever worked in industry. This is my first public accounting experience. I've worked anywhere from a bookkeeper all the way up to a controller in an industry. I did a brief stint where I thought that I didn't want to do accounting anymore. So I switched careers completely and became a licensed insurance agent for a few years. While I was there, I became junior partner of our agency. I took on some of our budgeting and forecasting for the agency and really found through that and because of a number of other things that I really wanted to lean back into accounting. That was where my passion was, where I really felt like I could provide the most value for someone or for a company, for now, I guess, like multiple people. So I went back into private accounting at that point. At that point, it was post-COVID. I really wanted remote work, though, is what I ended up finding and what I really felt like I needed with 3 kids. So I started just looking for anything that I could find realistically that was remote and did accounting and I looked for a long time and I felt like I was looking for a needle in a haystack. And then I found Summit at the time. And so I was like, I think I found the needle in the haystack. Like, this is it. This is great. It allows me to work remote and have the flexibility that I needed for my kids. And so I was hired on as a senior accountant with Summit shortly after we merged with Anders. I started in February. We merged with Anders in like March or April. So it was very, very quick after that. About a year in, I promoted to CFO, and so stepped into that seat. About a year later after that, I took a lateral move into an onboarding CFO role, and then it really just evolved into the role that I have today, which is principal, where I wear a lot of different hats for our division. I tell people a lot of times it's a firefighter hat and a firefighter suit that I wear on a daily basis, because that's just a large part of the role. But I told someone in an interview I did last week that maybe in some twisted way, I really like that, because I really like the variation day to day and getting to put on my problem solving hat and jump in and just empower our team and help our team work through whatever issues might come up during the day.
That's a great background. So let me start with just one piece that's in here. As you talked about the firefighter role, and as firms get bigger, the problems you really help us with is, and I would hope most people listening identify with this, when you work on client work, you can get so absorbed in that client work that we can see some of the problems that go across all clients and need to be fixed, but you never seem to be able to pull yourself out of the daily craziness to be able to work on them. And that's the role that you and some of your peers that are in that team can help do by saying, okay, onboarding is one that we continue to improve. And when you go through an onboarding and say, this didn't go well, we should probably fix this. I know it's really hard if you're doing client work to set aside the time to do that. And so I can see that, just the value of that firefighting role that you talked about.
Yes, it is one that I found that I like being able to jump in with teams, because it is just that intentional moment that I'm able to have with the teams of like, okay, let's pull back out from the work a little bit. Let's look at this from a higher level. Let's see like what we can do to improve the client experience or whatever the feedback was or whatever that is. And so I can just kind of help lead, guide, and direct the team towards solutioning those things or towards architecting whatever that next step is that needs to happen, that, to your point, like is hard hard to pull yourself out of, like as an individual contributor on a client, to be able to do that. So I do find a lot of fulfillment in that, and I'm glad to hear you say that it's valuable, because I'd like to think that it is.
Yeah, yeah, I would say it really is. Okay, here's one of the first areas I'd like to explore with you. As we talk to clients, as you know, we coach many other CPA firms, and often we're talking about moving from a bookkeeping practice up toward a CFO kind of practice. And I think of the talent there. Would love to hear a little bit about your experience as a senior accountant and how well you thought that prepared you for being a CFO. If people are saying, well, I've got this really good person, maybe I can grow them into that role. How was your experience being senior? And then how do you think that prepared you for a CFO role?
So I feel like as a senior, what I really loved, that I think prepared me the most for being a CFO, was really getting to sit in and listen to conversations that other CFOs were having. Obviously, I sat in with you, Tom, on a lot of conversations. I sat in with like multiple, that I really just took that and was a sponge and would come back and ask questions and just hear how someone else talked about something to a client, how they received it, what types of questions they were asking. It was really that frame of mind that I took into those conversations of knowing what I wanted my next step to be, and really just trying to absorb and look at the work a bit different from that. I will say that was a muscle that was something I had to build with reps in that, because as a senior, you are very much in the weeds of the work, a lot closer to the weeds of the work than certainly you are as a CFO. So stretching your brain, essentially almost like content switching a bit from the weeds of the work to the higher level consulting advisory elements of what we do and how we provide that to our clients. Like I said, it took a lot of reps. So I feel like just the reps themselves of being in those conversations, hearing them, then starting to feel more comfortable contributing to them and asking questions, even as a senior accountant in those spaces, was incredibly valuable. And what I found to be, and as I transitioned into CFO, that wasn't an overnight transition, like going from senior to CFO. Like I kind of transitioned clients off slowly. And so it was one that I had to flex even more as I transitioned really into that CFO role of still wearing the hat of a senior, but also still serving CFO level clients as well in that way. But because I had already shifted my mindset to that while I was in the senior accountancy, I really felt like it made that element of the transition much easier for me.
Yeah, that's a really good description. We should probably take one step back. Why don't you define what, in general, the role of it on a client of a senior accountant as opposed to the CFO? Do you want to talk about what the two do that are different?
Sure. Yes. So our senior accountant is primarily overseeing the accounting work. If we sell cash flow services, they are overseeing that conversation. They're leading that part of the conversation. So while they may be in the weeds for the accounting work, they also have an opportunity to show up as an advisor in that space. They also oversee staff, interns, our team of offshore accountants. So there's opportunity for delegation. So we really emphasize with our team moving from always being in the weeds to helping architect reconciliations in such a way that you create mousetraps to be able to be that high level reviewer, to be that partner with the CFO or the controller on the account. So that way we go into those client meetings fully confident with bulletproof financials, hopefully for the most part, understanding from top to bottom what the story is of the financials, because we've already worked really closely together to be sure that we are aligned before we go into that. So
Yeah.
I think that's the biggest difference that I'd say between the two.
So if it's done well, the senior accountant would say, I've got the financial statement and all the backwards looking information is correct. And if we're doing transactions like paying bills or things like that, that those are being done well on time, all that kind of stuff. Is that fair for the senior role? I know it's more involved than that. And then you talk
Yes.
about the support. So then the CFO is the way I would describe that is then the more forward looking, right? If I can count on the financials are correct, now I'm focused on a forecast, I'm focused on advising, I'm focused on where we're going, not as much where we are. And I would say it's not a direct role. Like as a CFO, I have to understand the financial statement. And if something is wrong in there, it is part of my role to find that working with the senior. And if it's really broken, then I'm working a lot with the senior on that. But when it goes well, that's sort of the delineation I would describe that's in there.
Yes,
That seem fair?
definitely.
Okay.
Yep, very fair.
Okay. You mentioned cash flow. Do you want to just tell a little bit about what the cash flow itself is and how you do advise as a senior doing that?
Yeah. So our cash flow conversations, that is where we get down to a week over week outlook on what our cash runway is for our clients. So we look at the prior week, but we also take a moment to look out into the future as well. So we look at what came in last week for cash. We look at what went out last week for cash. Then we look at the starting balance for the next week and look at our AR, AP, our forecasted outflows, and see where our cash lands us, and then see what runway that gives us. Like I said, week over week. CFOs, in comparison, do that monthly cash forecast on the balance sheet. So this is looking at that again, kind of zooming back in a little bit more into that week over week. And so that's an incredibly valuable conversation because we're able to see, hey, what bills can we actually afford to pay this week? What are we expecting to come in for inflows? Do we have some habitually late payers of invoices that we need to play out what that means if they don't actually pay us? Are we seeing a shortfall in cash? And so how can we advise the client in what they need to do strategically in order to get them through that shortfall? Like, is it that we need to push bills? Do we need to advise them to go have a conversation with their bank about upping the line of credit if it needs to be that? There's a lot of different scenarios that we're able to walk them through. And because we're doing that live, sharing our screen, seeing that happen and play out, and scenario playing that with the client right in front of us, I feel like that just for clients that really need that and are in that cash strap position, I've found that to be an incredibly valuable point of advisory that we can provide, and just service and value that we can provide for the clients.
I agree. And one thing that I see with the seniors that do that is as a senior, you end up really learning who the customers are and the vendors and what's going on much more than I do. And so I'm looking at the financial
Yes.
statements, seeing changes, and the senior will describe things. I'm like, wow, I can tell you're in there every single week and you really know what's going on. And it really helps add a lot of color to the conversation around what things are doing. And you also mentioned, I think, one of the key points around when you're tight on cash and it's receivable based, we're really pushing. And sometimes with new clients, we find they don't have good processes for collecting, right? They've got
Mhm.
5 people and they're sort of hoping someone will call the client and collect, and no one likes doing that. And that can be our role to push, like, okay, who's accountable? What is your process that they get an email after this long, then a phone call, then a whatever that turns into? And that can make a big difference.
Yes, I know there was one client that, as a CFO, was a part of these conversations, but we looked at from their AR perspective what it would do if we actually changed our terms from being net 30 to net 15 in that, and then invoicing twice a month instead of doing that once a month. And so it was in that cash flow conversation that we were able to play out and see what that impact would be to the cash runway, and just how that would get us over based on how payrolls fell. And they changed from net 30 to net 15 and invoicing twice a month, because we saw that it was a big enough impact to really help get us over the big humps of paying out payroll and some of these other big outflows that otherwise we were really stretching the dollar to get to the end of the month whenever we started invoicing and receiving cash again.
That's great. Okay, I'm getting close to moving away from kind of the senior to the CFO. The Tell me if you think this is true. Coming in as a senior, learning all those steps that when you needed to review as a CFO was probably a really valuable experience. Does that seem fair that you really understand how those
Incredibly
things work, that
valuable.
you can coach someone?
Mhm.
Yeah,
Yes, it was incredibly valuable to be able to go into those conversations and be able to coach the senior through that, but also being able to, like, know that I had a really solid understanding of the underlying accounting to be able to zoom back out and see, and just be able to, like, catch at a glance whenever something might be off that we need to dig into, together. Now, I'll say, flip side of that, that it was also a little bit dangerous, because sometimes I would look at the work and be like, "Oh, I know how to do it. I can just
yep.
jump in and fix it myself." So there was definitely this boundary that I had to learn for myself of pulling back out and making sure to use that as a coaching moment, to not just go in and fix work because I could and thought I was helping the person in that way, and just making sure that I shared that really direct feedback with the team member as well.
Yeah. Did you also find at times that after you got promoted that that was your comfort zone, that you might prefer to spend time on some of the accounting because the advisory is new and uncomfortable? Were you?
For sure.
Okay. Yeah, I'm
Yes.
not surprised by
Yes,
that.
it definitely did. Like, it definitely was something that I had to pull myself back out of a couple of times. Like, I caught myself just kind of leaning more that way a little bit, but I'm just a firm believer that you don't grow inside your comfort zone. So I just kept reminding myself of that, of yes, this is a little bit uncomfortable. I'm feeling a bit stretched, but I'm also growing. And that's what that means from that. And that's not a bad thing. So just leaning into that a bit more and making sure that I set my team up for success, to know like that part was still important, and making sure that I could trust that part of it and go into those conversations and really be able to step into that advisor role more confidently.
Yeah. And I don't, so you and I had different paths. That when I hired in as CFO. And I definitely realized that there was a lot to learn as I was reviewing people's work, yet I didn't actually know how to do it. And so I might have something like, we really need a schedule so that we can go through and do this. But then I'm stuck saying, but I don't know how to build that schedule. So I had to figure some of that out. We've done some things like have, especially on the controller role, but sometimes CFOs doing that senior level work on some clients, and that's a learning opportunity. When I first started, if a senior on my client left, I was responsible for doing a lot of the accounting work until that position was filled. As we've gotten bigger, that's changed. But as much as that was difficult because I'm feeling busy and now Hannah leaves and all of a sudden now I'm doing that senior work plus mine, I did learn it really well to do that. So there are definitely ways you can do. I don't think you have to, but I will say with you and others, we've had a lot of success getting people promoted and saying, okay, they've got that foundation. They've shown they're really good. Now they can move to another level. And that has been a really good path. So that's one of the takeaways I hope people will have is, if I try to grow into that, do I have people that I can promote up and to do those kind of things? And loved your point about listening to conversations. If someone's a small firm, I could see them saying, I'm the leading partner. Who else could do this? Well, you can bring people in and have them be part of the meetings. And then I would hope, and I know you did for some of mine, then you can start presenting in some of those meetings, but maybe you're not leading the whole meeting. So you can get really comfortable saying, okay, for this small part, I got really comfortable. And over time, you're sort of in the, okay, I could do this whole thing now. If I'm talking at every single meeting, I'm preparing to present, all those kinds of things that are in there.
Mhm.
Okay, one of the parts of your role that you do really well is the resource and capacity planning. So looking ahead, do we have enough people? And you're looking lots of inputs for doing that. And a very common question that we get from other firms is like, when do I know when I can grow? And of course, it's expensive to hire a person if you're not sure you need them. And so I'm kind of stuck. Do you want to talk how you approach our resource planning and capacity?
Yes, I will. I will lead with the disclaimer that this is always a work in progress for
Sure.
me, as we grow and just as we add more team members, as we think about the work a little bit differently. So, for resourcing and capacity planning, as many of y'all may know, in terms of listening to this podcast, we do subscription based billing. So we look at our clients a little bit different, maybe, than a firm that does hourly billing. So our average client size is about $65,000. With that, our team also has minimum books of business for each individual that we have, and so they carry a book of business. So when I'm looking at capacity planning, I'm certainly comparing someone's actual book of business against their minimum, but the minimum is really sometimes arbitrary, because we do also offer to our team variable compensation, which we can talk about, but that incentivizes our team to take on more than their minimum. So our average seniors book of business right now is almost $900,000, and most of their minimums are anywhere between $650 to $800,000 for the team. So it really varies by role. But when I look at that, I'm able to see realistically how much could somebody stretch beyond their minimum. So then I'm looking month over month and forecasting out based on what I know to be true for the individual as well, in terms of if they're on an onboarding, if I know that they have vacations coming up, or whatever feedback they've shared with me about what they individually feel like they can do. I play out how many new clients they can take on with that $65,000 average client in mind, to get to their goal book of business, not just their minimum, but the goal of where either they want to be or we want them to be. So then that really helps paint the picture for how many new clients month over month across all of my roles can we support as a team. I compare that against what our revenue goals are, what our net client pickup goals are. And so if I'm able to see that there's a deficit between what our team is forecasted to be able to carry and then what our net pickups goals are, then that obviously is a really, really clear indicator that I need to be hiring, because I'm doing that month over month, I'm able to see, at least with some level of detail, when that shortfall is going to happen for our team. I look at that, like I said, month over month. I look at it for 6 months ahead, look for a running 12. I've got forecasted promotions in there as well, because then that impacts capacity at each individual role. So that's really, I think, been helpful for me as I look at our work for the team. But like I said, the numbers are just that one part of it. So I want to emphasize that, because you can get really, really hung up on the math of it all. But if you're not also checking in with your team and understanding where they are, how they're feeling, what's going on in their lives, then those numbers really don't mean anything. Because we've had team members who get to their minimum and they're like, I'm okay. I'm good. I don't want to take on any more clients. I don't want to stretch. And that is perfectly fine. We've also had team members who get kind of like somewhere in the middle and want to stop and don't want to continue going up to that essentially upper ceiling of where we forecast. Or I've also had team members who say like, hey, like right now, like I'm moving right now. I need to scale my book back a little bit. Like this is just circumstantially where I'm at. And so we have to play that out. So it is a combination of certainly the math and the forecasting part of it, which is really fun, because I do still get to like kind of flex that like CFO muscle
Yeah.
in this role, and then also just truly check it in with your team and how they're feeling. So there's two sides of that.
Yeah. And I'll clarify, one of the processes that we use, we have a sheet that you maintain that says, am I available or not? And if I remember right, there's three things. Yes, I'm available now. I'm not available at the moment, but will be. And then sort of a red, I'm not available. And a pretty common comment around I'm not available now is I've got a certain number of onboardings. So right now I happen to have 2 onboardings. Those are busier than most client work. And so mine right now says not until I think I'm out in September. When both of those are done, they're up and going, and then I think I can take on more. And so I like that you're saying, mathematically you would show Tom's available. Tom's telling I'm not until now. And then you can look at those two things and decide if you need to have discussion of pushing me to be available, or like, okay, it says September. So you're sort of how are people feeling, and the other piece. Let me clarify one definition, because I think you mentioned the book of business, and correct me obviously, but it's as simple as if we had one client that was $65,000 and I was the senior accountant, you were the CFO, we would both have $65,000 on our book of business. And
That's
so you're
correct.
just adding up those that we have. Those are the 2 roles that share that book of business. So we don't try to split that up. In the way we price things, a client that gets $120,000 a year is perceived as taking more time. They have more services, probably bill pay, maybe receivables, payroll, all those kind of things. And a really small client might have much less. And so we think the dollars indicate the amount of effort that someone is spending. But it really is sort of that simple of add up what is the book that you're responsible for.
Yes, that is true. And that's one element of what I have to look at really closely, and why I analyze this month over month with book of businesses, because to your point, 65,000 is just the average. We may have clients that come on who sign that are $120,000 clients. And so then that has obviously bridged the delta for somebody from where they currently are in a month when I'm looking at that, and then where I thought they were going to be. And so whenever I play that out, then obviously that impacts my future capacity for each individual. So this is something that is a living, breathing document for that reason, because we're analyzing that just as we continue to get new clients and see how all the chips land every single month.
Yes. And we don't need to spend a lot of time on this, but where I mentioned that the amount we charge reflects how much work it is, it's not always the case. And so I could take a $65,000 client and say they're a really difficult client. Everything's hard about this. I think we've got some pretty good process that try to dig in and understand why. And if you have things like they don't follow, like the processes are inefficient, we can improve it. Well, that's an action you can take with the client to go back. If it's a scope issue that you're doing more than what's in scope, you can go back and change pricing. There are things you can do. Now, there are just cases where some clients are more difficult than others, and they're not all the same, but there are things you can do. And each year when we raise prices, we tend to raise the prices a little bit more on the clients that are not as profitable or taking more time. And so we're trying to make up for some of that piece that's in there. But in general, we do believe that that price somewhat reflects the amount of effort that should be in there.
Yes, that's true.
So then how often are you reviewing this resource planning with leadership and things so that people are aware of what's coming and how does it influence our hiring decisions?
Yes. So we look at this every week in our directors meeting. So we're having conversations about this about at least once a week. However, it stays up on the screen all day, every day,
I'm
just
not
about
surprised.
just as we get new work, as people are quoting things, like I'm going in there and I'm looking at, okay, like I've already got this person resourced out for this thing. How do I shift that around? What impact is that to their book? It's really a constant game is how I have to reframe that. So that way I get like excited about a game, but it is just a constant game of just kind of playing that out and moving those pieces around. So then I see where all of that lands by the time we meet as a leadership team on Monday and make sure that I understand what the story is for our team. Are we, do we have plenty of capacity at each role? If not, then what are we doing in order to help solve for that? Or do we have open positions, or are there some other ways that we're pulling in different resources to help with things? So make sure that I understand the story and make sure that leadership is fully aware of that as well.
Hmm. And we haven't talked about it, but this would be definitely feeding into our forecast. And so you could take, if I hire these two people, there's a cost that goes with that. Once they're fully at their book of business, I know how much revenue I'm getting. I know how much I'm paying for my team. So then what should my margin be? And then over time, how long does it take to bring someone up to speed helps me say, well, maybe as soon as I hire the person, well, not maybe, you do see a dip in profitability as they come up, there's a point where you're going to break even because now their book is at the amount that is being paid, and then you're going above that. So it can all help with forecasting. And I'm thinking of a small firm owner who may say, I've got 6 or 7 people. When can I add one more person? You can do this exact same exercise that's in there.
Mhm. Yes, and that is a part of the conversation that part of the perspective that I bring to our forecasting conversation as well. Just overall for us as a division, is I'm able to speak to those hiring dates and that ramp up period and what we need and just that runway, so that way we can, to your point, just have a better understanding holistically of what the impact to the margin is going to be. That way we know and we go into that with eyes wide open.
Huh. Okay, let me take a big shift here. Very early on, we talked about your role being able to be the firefighter and move some things forward. Talk a little bit about the process that we have around our quarterly meetings, and then we'll get into the rocks and the wigs, but that's part of it. How is it that we say, okay, we're going to try to continually improve what we do?
Yeah, so throughout the quarter, I really have started trying to be intentional about identifying things that may be patterns that we need to have more conversations about, just making sure from my perspective, because of my interactions with a lot of different roles on the team, I feel like I have kind of this bird's eye view into just operationally what's going on for the team. So I'm making note of those things and bringing them into our quarterly meetings, and really everyone in the room is. So we have an opportunity to bring up what we call our issues list. And so we all identified those. A lot of times we all go around the room and say like, hey, what would make this a 10 out of 10 meeting? And I feel like the majority of people are saying, hey, that all of our issues have been talked about, have been addressed, and we understand what our next actions are for those. A lot of times what's birthed out of some of those conversations for our issues are our quarterly rocks. So our goals of what we're really going to focus on intentionally as a leadership team and overall as a division. And then we've also implemented a WIG, our wildly important goal. So we make sure that we have a wildly important goal, which we try to be intentional about making sure that it's something that touches every role in our organization, or in our division at least, and that they can impact and that we can track towards moving that forward. So in our pod meetings, then we gamify that and we make a competition out of it and reaching that goal. So it looks different every single quarter, and it is a way that we can tie our team back and help them understand how they can directly impact the work, overall our goals as a division, and just make them feel more connected to it in that way.
Yeah, that's a great description. So 4 times a year, we're in person. It's usually 2 days. Of our immediate team, we have about 8 or 9 people, I think, that are in there. And then we'll invite some others for the firm that has been helpful. But we've chosen to do that with an outside facilitator. We use Tom Barrett for doing that with us. We also have annual goals. And so early in the year, we're setting those. Some of them are financial goals, not all of them. So when we set those quarterly rocks, we're looking back at those annual goals, and they might not align because things have changed, but usually they're aligning and saying, okay, if the end of the year goal is to get to here, what's the quarter have to look like to make ourselves work that direction? I think this is one of the best things that we have, that we get a lot accomplished at this. And it is a big time commitment, as we're busy to take the time. They're in-person events, and so we travel to them. It's a lot to go through and do it, but we also get a lot done when you're completely focused on these things to go through.
Yes,
Okay, so
I
then,
agree. I
yeah,
think I think it's time well spent, and I feel like it really helps me, and I hope everybody else understand where I need to put my focus for the next quarter. So I find myself when I look throughout the week, knowing what I need to get accomplished, because also in those weekly directors meeting, like I've got to go report back on whatever rock that I'm a part of and
yes,
whatever I've committed to in that. So I know that to be true. So when I look at my calendar for the week, I'm making sure that I have time blocked out, or whatever that next step needs to be already on my calendar. And that's one of the first things I think about, because to kind of like the underlying concept of the rocks, like those rocks go in the jar first. Rocks, big rocks, not just little pebbles and sand, go into that in terms of where you spend and allocate your time. So it really does help shift where I put my focus, and help shape where I put my focus every single quarter, which I find to be incredibly helpful, because otherwise I feel like I'm just kind of grasping at whatever, because I am a firefighter, like I'm just always putting out the fire that's in front of me. So it helps me make sure that, even kind of to look beyond the smoke and the fire, to see like what that end goal really should be for me at the end of the quarter, and reshift my focus each week.
yeah. If I were to give someone advice who liked the idea of rocks, I think that the two mistakes that are probably the most common that we continue to make, but I think are really obvious, is it's easy to try to pick too many rocks. You're sitting in a room with 2 people and you say, we need to get these 12 things done. And most people would realize, you're probably, if you pick 12, you probably won't get any done. If you pick 3 or 4, you might get most of them done, and you're probably better off moving things forward. And then the other is, we put a lot of work in those meetings of defining what done actually looks like. That when we get to the end of the quarter, we do review back the rocks, and it's a yes or no, did we get that done? And so having that done, so something like make progress toward implementing a practice management system, that is not something that is easy to say, did you get it done or not? And so saying like fully implemented, 100% of the people trained, every client up, some things that you're like, I can look at that and objectively say, is that finished or not? For rocks, do you think of anything besides the too many and not defined very well being the big risks or things you have to get past?
No, I think those really, I think even us as a team, like we're still constantly refining that. It's like, I think we're getting better at that, and just making sure that you have a really solid check-in process for what that looks like in terms of what you're expecting from your team, and coming back and reporting on. So that way you can understand early if something's off track or on track, and if there's going to be any blockers that you can remove out of the way. I think is incredibly important as you take those rocks and move them forward into the quarter.
Yeah, I think you're right. And this and some of the other things you do, like the quarterlies and rocks, there's a book called Traction. I'm forgetting who wrote the book offhand, but a book called Traction. If people want to read more about the whole idea around this, that's where we have gotten it from. And one of the things that we take away from that. Um, and then the issues is another one, that it's just hard to have that time to do that. And I think at times our facilitator, it's really nice to have a facilitator in the discussions to keep us on point. That if it's a difficult issue, it's easy to kind of wander and go through tangents and things like that. And so I think that's also a really good time where up front we're putting those on there. Where Tom, the facilitator, does a great job is things that come up, he'll say, let's put that on the issues list. It's there, it's parked there. Now we can continue on with the conversation. So having that time to, what do we try to spend, 2 3 hours a day, I think, of the 2 days just on the issues that we're bringing up and saying, here's what I, and so you have your list, I have mine, that during the quarter you're bringing these up, so then they go there and we've got a good place where we can talk about those. Yeah.
Yes.
Yeah. I'm a big fan of those. Okay. Let's move on to a couple what I'm going to call the lightning round questions for
Ooh,
you.
okay.
Yeah. I've
Got it.
got three. It maybe not, doesn't have to be quite as short as lightning round, but what do you think our clients are valuing more today that lots of firms are undelivering on, that firms are under on?
I know this probably is the cliche answer, especially in this space, and it's the buzzword, but I really do think it is advisory. I think we have to shift into a world where we are selling trust to our clients more than actually selling the accounting work. And just that backwards looking element. Yes, I know that we can't divorce ourselves from it in this world because certainly can't advise on something that's not right if we don't have that underlying data part of it. But I think that I just feel like we're really underemphasizing the importance of that trust and being that partner and that thought partner with our clients. And I think that is going to continue to be emphasized as we move into the future of AI that can do the dashboarding, they can do some of this, the KPIs that we've historically really been able to say that we bring to the table. So it's reframing, how do we continue to provide value to our clients? And that is one thing that I think overall we do well, but I think there for us as a firm and as a division, but I think we're going to have to see that be even more emphasized in the future.
I think you're right. I think that's a great answer. I think many people take too much comfort in feeling like if my client comes and asks me a question, they trust me and I'll give them advice on that. What I think people are really missing, I think this is what you're saying, is selling it as a service and being proactive and offering that. So, am I curious about your business? And when you say, I've already decided this, where I'm jumping in and saying, would you like some advice? Here's what I've seen, that, and seeing that as a key part of our role, I think is a real stretch for what a lot of people deliver. Um,
Yes, exactly.
what I hear often, if I were to answer the same thing, is I think onboarding new clients is one that I often hear when I talk to firms where they're saying they don't have a good process or anything else. And if I think of first impressions or work with the client, that is so important to have right. That's something predictable. And it's a thing that continues to change for us. And I think we do it really well. I think it's one we'll continue to always look to do better. But what are the things at the beginning of the engagement you have to get right? And there's a gate that we come out of that for our CFO clients. We're saying we have a forecast. I can produce your financial statement. I've cleaned things up, including like chart of accounts and past things. And now I'm ready to deliver service. But we're checking in with them during that time. We talk about around an 8-week period. If things are really messy, sometimes they can take longer, but letting the client know here's what you're going to see and when is just so important. And I would say if someone doesn't have that, to say, sure, start working with, but we're not sure what that looks like, you're just setting yourself up for getting off on the wrong foot.
Yeah, and kind of speaking of trust, like that's really where it starts is at the
Yeah.
very beginning. In those initial calls, doing what we say that we're going to do, being transparent, making sure that we're communicating early and often with our clients and setting expectations really early with our clients is incredibly important. And yes, I feel like we do have a really solid framework around that, but that is something that we firmly believe that just because that's how it's currently being done doesn't mean that's how it always has to be done. So we're always looking at how we can shape and improve that process.
Yeah. So, okay, second question. A skill that you think CPAs need now to develop that maybe 5 years ago wasn't quite as important.
I think it's people skills. I think it's soft
Oh,
skills that
okay.
really have to be emphasized in general that maybe did not have to quite as much in the past. And I think probably more so, especially for tax and advisory for us, I feel like that probably there's some inherent soft skills that we come to the table because of just naturally how we work with clients and interact with them differently than maybe other parts of the firm. But I firmly think that that is something that we have to put emphasis on more so now than maybe ever in the past.
Yeah, yeah, I think it makes a lot of sense. For me, I agree with you. I can go maybe opposite direction. People skills. AI 5 years ago was kind of
Yeah,
nothing.
totally.
It's hard to get away without anywhere without hearing about AI, but I really do think the people who embrace it and can be more efficient are really going to be competitive about some who can't. And you think of the things that can be done more quickly or more completely or other things. And I think if you're not leaning into that, and looking at some things internally and saying, how could I make this better? I think you're really missing something. And I think that's only going to get faster and faster because we've just seen how much it's getting better.
I was listening to a podcast not long ago, and the statement they made was that AI is not going to take our jobs, but people who know how to use AI will take our jobs. And I thought that was just a very, very great way to put
Yeah.
that in terms of emphasizing how we really have to be sure that we're ahead of that curve and not behind the curve, because there are going to be plenty of people who are. And so we don't want to be the ones that are not.
Yeah. I have been amazed recently how many tools that we're using have AI embedded in them. And so just getting used to that. And Excel is one recently that I've been fascinated when I start to put in a formula, all of a sudden the rest of the formula is filled in. And I'm like, how did you know that was what I was about to do? And it's usually doing a pretty good job. But then also how much I'm relying, for example, we record all of our meetings with clients. And what I like is that's becoming much more common practice. And so I don't have clients pushing back saying, why are you recording? But it's in an AI based tool that I find myself very often going in and asking it questions. Hey, summarize for me what we just yesterday, the client had, they were all over the place with different tax related things. And I'm getting ready to meet with our tax director. And so I just said, summarize for me the tax related things. And it threw in this table of 5 different things, probably saved me 30 minutes of looking at transcriptions and doing things. And now I'm much more prepared. And I send it to our tax director before the meeting today so he can think through all these things that are in there. But to be able to look across and do that has just been great, to do that kind of summary kind of stuff. I'm curious, any agents that you would say you've got running on a somewhat sort of in the background and delivering things to you? Are you doing much of that yet? To me, that's sort of the next place where I have to focus.
Yes, so I can't take credit for it. I have to give credit where it's due. But Jamie Naw on our team has really leaned into AI, and one way that he has done that as leading our division is, to your point, Tom, of recording all of those meetings.
Yep.
That's incredibly valuable data that we have at our fingertips to use, not just from the client perspective of things, but even from a practice management element of what we do. And so he has created an agent that will go through and look across all of our team's meetings. And it kind of feels a little Big Brother esque, but I find it to be still, like I said, invaluable. So it looks across all of the meetings and reports back to us each week any sentiment flags that it's hearing in client conversations that our team is having with them that we need to drill in and double click into and pay attention to if clients have expressed concern or they're frustrated about something. It really is helping me feel like I have more of a lead indicator into problems that might be happening underlying in the surface, so I can go in and have conversations with the team sooner before the client is ready to leave us or they leave us a poor review or whatever that is. So that's on the client side of things, but even from the coaching side of things with our individual team members as well, that is also really interesting data to see where we can drill in and help our team be better advisors and give them more support and more resources based on feedback that it's seeing across all of our teams, client meetings, and maybe even some internal ones too. So that report is pushed out to us weekly. So I'm able to make that a part of my routine each week of going in and reviewing that. And again, just another way that it's able to frame my focus for the week. And because that feels incredibly important to me. Like the client experience is very important. Obviously, client churn matters a lot to us and what we do. So if there's anything we can do to help mitigate that, then it's helping me feel like we can do at least something to feel like some of that's within our control.
Yeah. And the only thing I would add to that reporting that is so valuable is it will suggest here are some really good questions that you could be asking the clients. And so I've seen a lot of value in things like here are to-dos that you promise, and those are good to review. I think I'm pretty good at capturing, but there are some times where it reminds me of something. Some of the most valuable are questions on like, oh, I hadn't thought about asking this. I'm often focused on what do I need to tell the client and what do I need to do that. But as we both know from advisory things, probably the best value comes from asking really good questions. And so getting some of those as tips, I've grabbed many of those before and said, I need to ask more about that so that I'm learning what they're doing and maybe helping them get to an answer or something. Hannah, this has been fantastic. So we're on the Modern CPA Success Show. You also host a podcast. Do you want to talk a little bit about that? And just if people want to hear more
Yes.
of you and see your face and hear your voice more.
Yes, you have the opportunity to do that, and you can even earn some CPE on your mark with it if you feel like you need it. But yes, I do help co-host the Young CPA Success Show. It has been on a bit of a hiatus for a little bit, just with some changes that were made, but we will be relaunching that soon. But there are plenty of episodes that y'all can go listen to. In fact, Adam, Tom, and I had this conversation when we were in San Diego of like whose podcast performed better. So I encourage all the listeners to go listen to mine so I can outperform this podcast, please. And thank you. That would be great.
Yes, it
Yes.
is a great one. And I'll retell a quick story that when I was at the DCPA conference back in 2024, we're in a big break and a woman looked over who I didn't know and said, I love your podcast. And I had this instant feeling of like, maybe this is what being famous feels like. And she went on to describe all the things she liked about your podcast. Hannah and Joey are just great and all this. And I'm like, okay, maybe you saw my face somewhere, but you are not talking about mine. So it was a good dose of humility following my little feeling good about myself.
Oh, that's great.
Well,
That's
people should
great.
check it out. That is a great one. And thank you. This is really helpful information. I'm hoping people took a lot of the good lessons away because the things that you're doing are helping us move a lot of stuff forward. And I appreciate you sharing that with us.
Thanks so much for having me, Tom. This has been great.
Good.